Good morning, and welcome to this week's What's Affecting Oil Prices. I'm Ashley Peterson, lead oil analyst here at Stratus Advisors. Brent rose $1.64 a barrel last week to average $69.49 a barrel, above our expectations. WTI rose an even stronger $2.84 a barrel to average $62.36. This was Brent's second straight week of gains and WTI's fifth week. Moves in managed money were positive, but smaller than in previous weeks. For the week ahead, Brent is likely to see additional strength, but the psychological $70 a barrel barrier could be too much to sustainably overcome, and we expect Brent to average closer to $71.50 a barrel. Geopolitics will be a positive factor in the week ahead. In Libya, General Haftar has escalated his campaign against the internationally recognized government and hopes to unite Libya under a singular government led by him, leading to supply disruptions. Additionally, the U.S. has targeted Venezuelan oil shipments to Cuba in an effort to further restrict income to the Maduro regime. And the introduction of NOPEC legislation in Congress could inject uncertainty into markets about the future of the OPEC Plus supply deal. The dollar will be a neutral factor in the week ahead. Friday saw strong U.S. employment data, further easing fears about demand. Non-farm payrolls increased 196,000 jobs in March. Wages also increased, with the annual increase now at 3.2%. If wages were to increase too quickly, it could stoke fears about inflation and a rate increase from the Federal Reserve. Trader sentiment will be a positive factor in the week ahead. Speculators raised their net long positions for both Brent and WTI last week, but in a smaller move than previous weeks. Supply will be a positive factor in the week ahead. Disruptions in Libya, compliance from OPEC, and sanctions against Venezuela appear to have been enough to counteract the first increase in drilling rigs seen in 7 weeks. Product demand will support prices in the week ahead. Product demand continues to hew to seasonally typical levels, disproving fears about a collapse in demand. Strong economic data will further soothe fears about a sudden collapse in demand. Refining will be a neutral factor in the week ahead, with margins falling on stronger crude prices.
This weekly report is an excerpt from our short-term price outlook service analysis. For more information, please contact us. For more Hard Energy videos, follow our social media channels.